You do research on the BDI on the web, go to reputable sources, and they will all say the same thing. In June of 2008, Bob Janjua, the chief credit strategist for the Royal Bank of Scotland, had forecasted a very nasty period is soon to be upon us. Research indicating that the S&P 500 would fall by more than 300 points by September. That was in June. His estimate turned out to be conservative. On August 14th, 2009, look at the title of this article, Stock Market to Crash Again in 2009. Guess who they're quoting? Once again, Bob Janjua of the Royal Bank of Scotland says we're predicting that we're heading for another stock market crash this autumn. And notice one of the reasons why he says so. Economic reality appears very different than what the popular media is suggesting, and his insight is coming from the Baltic Exchange Index. It's declining, and as he says, the stock market trend follows that of the Baltic Exchange. Here's another resource, BBC, Stock Market Crash in Autumn. A stark commentary by BBC radio business presenter Greg Woods suggests the real impacts of the subprime mortgage market will hit the stock market in September, and it won't be pretty. From the website Seeking Alpha, notice September 1, 2009, Baltic Dry Index retreats. What are the drivers? As the Baltic Dry Index scuffles back to early May levels despite a recovering global economy, one must ask, what are the drivers? It goes on to say, the stock market news doesn't matter until it matters. Conclusion of the paragraph, suddenly it matters today. Paragraph, if you really believe the world economies have turned healthier the past 3 months, you have to look in the mirror and ask why the BDI is back down to first half May 2009 levels. All the world's major countries export their way to prosperity, but the BDI is going down. Again, out of the UK, BDI has worst week since October meltdown as Chinese demand slows. That article, August 7th, 2009. This article comes off of tradersnarrative.com. Baltic Dry Index continues leading the stock market. Here's a similar graph of the BDI against the S&P 500. Now notice what they conclude. What's it saying now? BDI tops out in early June of 2009, but since then it's been at a downtrend. In keeping with the same approximate time lag, we should expect the stock market to top out in late August or early September, which is right about now. And lastly, from the Wall Street Journal, August 24th, 2009, shipping cost index drops. What's it talking about? The BDI. Down 26% this month and likely to fall further during the rest of the quarter as China continues to cut back on commodity purchases. Friends, the conclusion of the matter is clear, plain, and simple. The BDI, as low as it's going, is a leading economic indicator. The current march up in the S&P 500 and all of the other exchanges cannot be sustained. As a leading economic indicator, the BDI says we're going down. And when we start to go down, the VIX says we are going down big. This is Rod Kusanen, Spooman for Risk. And as a footnote, as we said before, take appropriate action with your portfolio with protective stops at least. Talk to your financial advisors. Help them to understand your perspective on what the market is telling you is about to occur. Don't allow yourself to lose all that you've gained this year. Once again, Rod Kusin and Spooman for Risk.